Hello everyone and welcome back to my channel. In this video, I will share with you how I choose which pairs to trade each week. As you may have noticed, I trade multiple asset classes including Forex, indices and commodities. And every day, I receive many DMs on my Twitter account asking me how to select the right pairs to trade. So I have decided to create a video just for that purpose. I'll walk you through my process of selecting easy to trade charts, discuss my filters, and explain how I organize them on my watch list. I believe that choosing the right pairs to trade each week is essential to become a profitable trader, as it allows you to focus on high probability conditions where everything is clear. So if you are interested in that, then stick around till the end and don't forget to hit that like button and subscribe to my channel so you won't miss any upcoming videos. And let's get started. So first of all, I have here a list, which is the general list. It has all kinds of pairs. It has Forex pairs, indices, and commodities. I trade gold in the commodity class and US 100 in the indices. This is the first list. I'm not trading this list, but I have another list, which is the watch list. All right. So what I'm going to do is I go through all these pairs right here, and the ones I like, I'm going to put it on here on the watch list. So as you can see here, and don't worry, I'm going to show you how to move pairs from the general list to the watch list. So how to filter clean charts. So the watch list, as you can see, it has two sections. The first section, which is step 1, I write here buys, and the second section is step 2, which is the confirmation. Now, what do I mean by that? If we go to our trading plan, and I have already made a video about this trading plan, you can go and check it out. You can see here that it has 3 steps. It has the buys, and here are the time frames that we want to look for. And we have the confirmation step, and of course the time frames. On the buys, we have external range liquidity to internal, and I just want to add another line here, which is internal range liquidity to external range liquidity. I'm going to show you how that looks like in the chart later on, so don't worry. So the first step, which is internal external range liquidity to internal, and internal range liquidity to external range liquidity. So what I'm going to do is I go to general list, right? And I want to look for this kind of movement. And let's start with external to internal. So what I want to see, remember the weekly, daily, 4 hour. These are the only time frames that we look for. I want to see an expansion higher. That expansion, I want it to take external range liquidity, so swing high, and this is a bearish example, all right? And I want that expansion to leave a fair value gap. And I want, of course, that expansion to be energetic. What do I mean by that? I don't want, for example, to see 3 or 4 or 5 candles from here, from the beginning of that move, all the way to that external range liquidity. So it is energetic. I don't want to see 20 candles in here, 20 small candles. That means that that pair is not volatile enough for me. So I want to see price take external range liquidity or approaching to take external range liquidity. So either it took external liquidity or it is approaching to take that swing high. So my next move is I want to short, right? I want it to short to the internal range liquidity. So from external to internal range liquidity. If I see these criteria on that particular pair, then I move it from here to here to watch list, and exactly to step 1 buys, to the buys. And I'm going to show you later on when to put it on step 1 and when to put it on step 2. So this is the first scenario: expansion higher, energetic, taking external liquidity and leaving a fair value gap behind, and then I want it to short to that fair value gap. The second scenario, which is again expansion higher, right? Of course, taking external liquidity, leaving a fair value gap behind, but instead of shorting here, price already shorted to here, and now it is on that internal arranged liquidity. As you can see, on the plan right here, internal liquidity to external arranged liquidity. So I want it to long to this external arranged liquidity. So the pair, again, expansion, taking some kind of external liquidity right here, leaving a fair value gap. Price is then on that fair value gap right here, trading to that fair value gap or approaching to that fair value gap. So we have a potential move to here and then expansion higher. So either approaching or it is on that fair value gap. So now we are trading internal to external arranged liquidity. I know that I am being repetitive, guys, but this is how you can learn and understand better. So these are the two scenarios of price where I'm going to choose it and put it on here on step 1 buys. For example, and don't worry, I'm going to show you more examples later on this video, but I'm going to show you a small example right here, which is the euro Australian dollar. So you can see we have a nice expansion to the downside, taking external liquidity. So now we are interested in buying, right? The first example right here, taking external liquidity, leaving fair value gap, and now we want to short. On this example, we want to buy, right, to that fair value gap right here. Price then retrace to that fair value gap, right? And then what do we want to do? We want to short from that internal liquidity to that external liquidity. So as you can see here from that chart right here, price didn't reach that external liquidity, but I still made money on this move right here. So it doesn't need to come all the way to here to short. And here's the proof. So as you can see, this is the Euro EUD chart. And this was my first trade on this week. This was Monday. I took a long from that external to internal arranged liquidity. And after reaching to that internal arranged liquidity, I wanted to short to internal arranged liquidity. And that happens on Tuesday. And then I shorted again to that external liquidity. And here we go on Wednesday. So 3 trades, 3 winners, because I chose the right pair to trade. And then I took a break-even trade right here. I risked small and I had to close it because of time. So the market was about to close. Anyway, so if I see one of these scenarios, I'm automatically gonna pick that pair and put it on step 1. Now, when do I put a pair on step 2? So let's, for example, choose this scenario right here. The step 2 is the confirmation phase. So after price, for example, price reached that internal arranged liquidity in this example right here, then I want on the confirmation step, let's say for example, we chose the daily chart right here, then I'm going to use the hourly chart right here. So I want to see a market structure shift, and that market structure shift will confirm that price of mine. So if we zoom in on this structure right here, so we zoom in on this structure, I want to see something like this. This is the hourly chart, and then a market structure shift, right? And leaving a PD arrays on here, fair value gap, a breaker, an order block. So when I analyze a pair from this list, and it is already on that internal liquidity and already confirmed our buys, then I'm going to move it to step 2, the confirmation. And the reason of that, because after step 2, we have only one step left, which is the execution time frame. So on that particular day, you are going to focus on only the pairs that are already on the confirmation time frame. And you have 4 pairs on your watch list, 2 of them on the buys and 2 of them on the confirmation. Pairs on the confirmation is gonna give you a signal, right? A buy or sell signal sooner than this. So you are going to focus only on this 2. So as you can see that although we trade all kind of pairs, all of them 30 pairs, and indices and commodities, we are only trading 4 or 5 pairs per week. And per day, we are only trading 2 pairs or 1 pair. And this is how you trade everything without missing any move. This is the right way to do it. And now let's move on to examples. So on examples, I'm going to show you clean charts, and then I'm going to show you charts that I'm not interested in, that are not satisfying our conditions right here. And let's move on. And now let's start with the clean charts, so the charts that you want to trade, and then we're going to move on next to the charts that you don't want to mess with. So Let's start with the euro against the US dollar. As you can see here, we have a nice displacement to the downside, energetic displacement, 2 candles, and we took that external range liquidity and leaving fair value gap behind. So we can now take a trade from external to internal, right? To that fair value gap right here. And it happened to be Friday, so TGIF, and here's pictures. I didn't take this trade. The second I wanted to hit that market buy, unfortunately the news hit and I completely missed the trade. So as you can see here, we took that external range liquidity, here we go, right? And then left a fair value gap behind, so we can now trade to that fair value gap. And here on the 1 hour, we confirmed that with a nice market structure shift, taking this swing right here, leaving a fair value gap again, retracing to it. And if you go to the 5-minute chart, a nice displacement, a breaker, and I was here on this candle. At the moment I wanted to take the buy, boom, completely blow up. Anyway, so this is an example of a clean chart, and let's move on to another chart. So there we go. This is another example. This is external. We are still on the external to internal. I'm going to show you later how to move to internal to external. So a nice displacement to the upside, taking external range liquidity, leaving a fair value gap behind. And I want you to notice that displacement is only 3 or maximum of 4 candles. You can see here, right? So it is energetic. Now we are interested in taking shorts. Here we go. We confirm that, and then we took that internal range liquidity. So if you are here, for example, if you are on this candle, then you want to take this pair and move it to the watch list, and particularly in step 1. If we are here, so we confirmed that on the hourly, and you are waiting for that execution step, then you can move it to here, right? So you can focus on that particular pair on that session. And now let's show you another example. So I believe I shared with you this trade live. So you can see here we took this external liquidity, leaving a fair value gap behind and confirming that buys, right? Again, mark structure shift on the 5-minute. And now let me show you internal to external. So here we go. We took that external liquidity and now we traded to internal range liquidity. Our next target is external range liquidity. So if you are on this candle right here or approaching to that internal range liquidity, again you can put it on step 1. And if we confirm that, so on hourly we confirmed that buys of ours, so go to here, then you can move it to step 2, which is the confirmation, to focus on that. And as you can see here, nice trade. Another example, right? So price is in internal range liquidity and we confirm that. So as you can see, clean displacement to the downside. We confirm that on the hourly, and here we go, another 5-minute mark structure shift, and you can take the trade right here. And here's another example, GBP against US dollar. So as you can see, on a nice displacement to the downside, price retraced to that fair value gap, the daily, and then we move on. We did a continuation pair right here and continue to the external range liquidity. And now let's move on to charts that I'm not interested in. So as you can see here, we are on the US dollar against Japanese yen, and we have nothing. We have no expansion. We have no fair value gaps. We have nothing. I'm not interested in this pair. Let's move on to another pair. When you practice, guys, when you practice analyzing charts on the higher time frame, the process will become easier, and it's only going to take you 10 seconds to determine whether this pair is clean or not. So in this pair, we have nothing, right? If you go to the 4-hour, we have this nice displacement, but as you can see here, price didn't give us confirmation on the lower time frames, which is the 15-minute chart. So we are not interested in this pair. Let's move on to another pair. All right, this is the EU. Already talked about that. This is the Dixie. All right, so we have here AUD against US dollar. Again, we don't have anything right here. As you can see, a lot of wicks, a lot of manipulations on the weekly also. This is not a clean chart, guys. We are on a range. Move on. The New Zealand dollar against US dollar. Again, there's nothing clean in here, right? This is euro against AUD. This is a clean chart. As you can see, a nice displacement to the downside. We hit the daily fair value gap, right? We hit also an order block. So this is supposed to be an order block. And now I'm waiting for an hourly market structure shift to confirm that buys, right? So this is a clean chart. And here, this is also a clean chart. So as you can see, a nice displacement to the upside, taking external liquidity, and then moving on to this fair value gap. And now we want to confirm our buys on the 4-hour chart, and we did. So this pair is on my watch list. Maybe tomorrow it will give me a nice signal. We have also an SMT divergence. And let's choose another pair. So as you can see, this is the Canadian dollar against Japanese yen. We have a displacement, but as you can see, it is not energetic enough. So I don't like it. Thus, I'm not interested in. Moving on to another pair, which is the US dollar against the Swiss franc. So as you can see here, I was anticipating a move to this internal range liquidity and then maybe take a long trade all the way to this original consolidation. Price didn't give me that. So as you can see here, we have small up close candles to the upside. So this is not my kind of environment, right? I want a nice displacement, energetic displacement like this. So I'm not interested in this pair. Let's see another pair. All right, this is EU. All right, this is a nice pair. This is euro against Japanese yen. Again, this is not a clean chart, guys. This is a directionless pair. We are on a range. So again, I'm not interested in this pair. This pair right here is euro against the New Zealand dollar. We have a nice displacement to the downside. Price didn't give us a return to that internal range liquidity, right? Thus, I wasn't interested in that. But on the daily, this is the daily time frame. But if you go to the 4-hour time frame, we have a nice displacement to the lower, right? We have a fair value gap. Price retraced to that 4-hour internal range liquidity. I was interested in this pair, but I took the trade on euro AUD. So these two pairs are correlated. So I don't need to take two trades on the same correlated pairs, right? Let's move on to another example. And this is euro against the Swiss franc. As you can see, we are on a range. We don't have that nice displacement. Maybe in the upcoming days, we can see a displacement to the upper, right? For now, we don't have that. So I believe we have come to the end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below. I'll answer you as soon as I can. Happy trading and good luck.